You've probably heard of inflation, maybe hyperinflation. You might have even heard of stagflation. But today, we're talking about a new term that's out there called transitory inflation. Rob Gill is here with me today, and we're going to break down exactly what that is. I mentioned a couple different types of inflation, and inflation really is the idea that my dollars are worth a certain amount today, right? I can spend, if I have $100,000 today, that's worth $100,000. But 30 years from now, with just 2% inflation, I would need $180,000 to equal that same $100,000. So inflation is this silent tax or killer eroding factor on your money that comes about when nobody's looking, right?
It's like a stealth bomber.
It really is. It takes your money out, and so your buying power becomes less and less every single year as you're stacking up your money and saving it in vehicles that aren't earning anything. Then you might have heard of hyperinflation. And hyperinflation, back in 2008, 2009, when we came out of the Great Recession, hyperinflation was what everybody was calling for. Why? Because the government printed trillions of dollars. They called it quantitative easing. And there was 2 or 3 rounds of quantitative easing, and almost seems like it never ended. They were expecting hyperinflation. This is where interest rates would rise so quickly and all the prices would rise because there's so many dollars flooding the market after goods that there's just not an abundance of goods. That didn't really happen, except maybe it pushed some dollars into the stock market, right?
Question is, did they do that by design secretively?
Yeah.
Listen, you could be an economist out there and fight it tooth and nail what I just said, but I'm pretty sure that rates stay low so they can dump money in the stock market.
Yeah, very, very much so. So there's a lot of different types of inflation. Then we think back to maybe the later 70s, this idea of stagflation, where prices on goods were going up, but incomes were staying relatively the same or lower. And that's another bad place to be inside of the economy. But now we have this new term, right? We have transitory inflation.
Yeah, transitory inflation is a new buzz. It's a new buzzword. I think that, if you look at the price of wood, I'm going to speak in general terms. I know there's some CFPs out there that are going to get specific on the wood. But for the purposes of this, I am not a CFP. I am not a fiduciary. Everything we talk about is in general terms. To be more specific, please click the link below and reach out to one of us, and we gladly take you through the process. With that being said, though, transitory inflation basically means the price of goods are exaggerating drastically right now because the supply chain is under pressure. Because of COVID, production lines and manufacturing companies all slowed down. Now, seemingly as of last Tuesday, COVID ended, the button came on and the world just opened up again. And because of that, wood has gone from approximately $25 to $100. So that's going to affect houses, right?
Right.
That's going to affect, some of the construction guys that are buying houses. They got to put more money out, and it's going to begin to shrink their profit. When you read up on transitory inflation, they're going to tell you, meaning the government, that they are going to keep rates low for now, right? They're not going to use this transitory inflation to raise interest rates yet. The question becomes, if it prolongs, if the ships can't come over in time, if the supply chain can't correct itself, can we fall into a hyperinflationary environment?
Yeah.
I don't know. Probably. But Eddie just made up a great point. He just made a great point. In 2008, they printed over $2 trillion, quantitative easing. Think of a super highway as our economy. Meteorite came in, blew up the highway. Government printed money, filled it in. Market ran from 6,000 to, let's call it 29,000 over the last 11 years prior to COVID. And it ran primarily because interest rates stayed low. There was a bifurcation of inflation, another conversation for another day. The point is, are we going to do that again? Now, I don't remember wood going from 25 to 100 back in 2008. No. I don't remember that. So I think that, I saw there's a restaurant, the ladies behind the camera, they've eaten there a couple times with us. They sent out an email about 4 weeks ago that they can't get people to come to work. The reason why they can't get people to come to work is because these people are on unemployment. I was with an electrician the other day at my son's graduation who told me that he's never been busier. Can't get copper right now.
Yep.
All the PVC stuff is, in a transitory inflation environment. But he said to me, he goes, I can't get people to come to work because they're making more money sitting at home than they would working with me. That's a problem.
Yeah.
So if we understand all of these different external forces, right?
Yes.
And we know if we properly plan it with cash value life insurance, not as the only answer to everything, but let's call it the centerpiece of the overall strategy. When stuff like this pops up, I was always told that, in the insurance space, they have a dividend component, and these dividends have a lagging, time to it. But if inflation or interest rates go higher, these dividends can begin to go higher as well.
They could. In theory, the idea is if interest rates rise, a lot of the insurance companies' major investments are in government bonds, corporate bonds, right? And so those rates would go up. It would affect their general accounts and should, as well as their other investments, bring everything up, increase their dividends. But even at that, in today's current environment where interest rates are so low, the growth inside of a cash value life insurance at the guaranteed rate is still much, much higher than what's out there in a bank account.
Yeah. And to your point before and what we talked about, if there's $4.5 trillion, not quantitative easing, now it's called stimulus money, where's it going to go? You're going to have your cowboys that stay in the space of crypto. Not to say that that's right or wrong, but it's out there. Not to say that, Bitcoin isn't the next gold standard, where gold was a standard, but it couldn't really translate around the world,
right,
which is why we came up with the dollar. All of these other 50 or so odd companies that are out there, these NDAOs and all these other companies, I'm not suggesting anything. I am not a fiduciary, just so we're clear. But these other potential cryptocurrencies are like the new wave right now. And it's important to understand that, money changes. And what money looked like 200 years ago is different than it looked like today. I know back in the Roman times, what they would do when they wanted to print more money, they would clip the coins. They would take the coins, they would heat them up, right? So it became liquid.
Yeah.
They would make new coins, but make them smaller so they can increase the money supply,
wow,
right? So like I said, history doesn't repeat itself, but it does rhyme. With that being said, transitory inflation, transitory inflation, transitory inflation. You heard it here. Be aware of it. It could be something that is long-term. It could be short-term. But if it turns into hyperinflation, you better get a checkup from your neck up.
Absolutely. So we're talking about a lot of different shocks to the economy, right? Inflation is a shock to the economy. Transitory, supply chain disruption, all these things that are going on today. This is not a one-time occurrence. These are things that happen throughout time. Like Rob was just talking about the history of money and how currency changes and all the different things. The important thing for you today is really to sit down and try to figure out, one, what is your investment philosophy? Are you so scared that you're sitting on a pile of cash and you're letting inflation rot it away? Or do you have a philosophy and you just haven't yet deployed it? You're not certain what the right things to do are. Sit with a planner. One of the members here at Epic can reach out to you and really talk to you about and build out a game plan for you. What do you need to do to protect yourself against inflation? Other eroding factors of wealth, right? Taxation, all the different landscape changes that will happen in our economy.
And listen, folks, thank you for tuning in. If you're not ready to reach out to any of us yet, please continue to watch these videos. Hit that subscribe button. When you hear that ding come every day, continue to listen. And always remember, if you have a question you want answered, put it in the comments section. Or if there's a specific video that you want us to talk about, do that as well.